Hello and welcome to CMC Markets Trading Outlook for the week of January the 18th, 2016. My name is Colin Szysinski, Chief Market Strategist. This week we are going to be asking the question, how oversold can markets get? When I sit here and I look at my screen here today, this is one of the worst days I've seen for the market in years. Look at this. Every single major indice that I have here on my list is down at least 2%, with the exception here. Norway is only down 1.5%, India. But look at this. Australia down 4%, Canada almost 3%, Germany almost 5%. This is a market rout. Look at this. UK down 3.6%. The US indices down 3 to 4%. And the markets are just getting absolutely crushed today. Now that being said, markets are also starting to get oversold. And at some point, we could start to get a trading bounce. The question is when and how much, and how low might markets actually go before we get to that point. But it's something we have to watch for, even when things are looking really bleak, is at some point we probably get a very swift trading reaction as well. What was actually driving this lower here? Look at crude oil. 5.6, 5.9% down for Texas and Brent. Decisive taking out of the $30 level and heading lower. And look at this, we're also seeing a defensive flow. Gold, of course, picking up, rallying 1.3%. And if I come over here to dollar yen, yen gaining 1.2% against the US dollars. So clearly we're seeing quite a defensive flow of capital. Interesting, even euro dollars having a good day here as well, attracting some capital, because sterling is not. Sterling is continuing to weaken as well here. So it's a really quite a volatile day in the markets, and we may have even more significant market action next week. So what's some of the other factors that are driving the markets lower today? Well, number one, and important for knowing for the beginning of next week, it's a U.S. holiday on Monday. It's Martin Luther King Day. And it sure looks like a lot of Americans don't want to be holding stocks over the weekend. And that's part of the reason I think we're seeing some of these flows out of markets that we've been getting. The other part of that is that we've had some mixed to weak U.S. data today. There's still a lot of talk as to will the Fed actually hit the 4 interest rate hikes that they've been talking about this year, or is that going to start to get trimmed back, especially with the crude oil price collapsing again and dragging on inflation. Also, we had a big sharp drop in the Empire Manufacturing Survey, and industrial production was also worse than expected. So there are still signs of softness out there, even in the U.S. economy, although perhaps it's more the international economy that seem to be in more trouble. So we've got markets are really selling off here. Markets are getting oversold. Could they get more oversold? They certainly could. But at some point, they'll probably reach some sort of a limit. And when we do get a snapback, it'd probably be fairly significant. We just don't know when. The other thing we've got is crude oil. The crude oil markets are under a lot of pressure, with everybody wondering when will Iran return to the market and how much are they going to come back into production with. How much are they going to supply? Are they going to be able to put into the world market? And that's going to depend on a few things. Will all the sanctions come off, or just some? And how much production and quickly can the country put production back on stream? So those are still some pretty big questions and uncertainties out there surrounding Iran. Also heading into the new week, there's a lot of news on tap, and in particular, we're going to have a lot more earnings reports starting on Tuesday when the U.S. comes back from the holiday. This week's earnings reports, we saw fairly consistently companies were beating the street in fourth quarter, but then guiding lower or guiding below expectations for 2016. We saw that with Alcoa, with CSX, and with Intel so far. And so a lot of people are going to be watching now as we get into the next week, when we start to see even more broad base of companies reporting, is do we see this trend continue? What are U.S. companies thinking about 2016? How much of an impact is the higher dollar having on their earnings? So with these uncertainties out there, we're definitely seeing expectations, though, are starting to come back down as the markets come back down as well. People aren't clearly not as optimistic about 2016 for stocks as they had been even 2 or 3 weeks ago. So lots going on, and I will do a survey of a number of markets. I also wanted to, when I get a little farther along, speak to two other things. There are two central bank meetings this week. There's the Bank of Canada on Wednesday. Street is expecting a quarter point cut, and the ECB is meeting on Thursday. The other big news of the week, and it's very early on as well, is China news comes out Tuesday in China, Monday night in North America, and that's GDP, retail sales, and industrial production. Big reports. One of the big things that's been driving markets down has been people supposedly are trying to look. China's been dragging the markets down, and we've seen 5% falls and 7% fall, and we've seen consistent declines. And the question is China's economy falling off the cliff as fast as its stock market? We'll find that out on Monday night when we get the GDP and these other reports. My guess is that it's probably not falling off as fast. I think a lot of it's market internals that are driving the Chinese market lower. I think this is a continued fallout from last summer's sell-off when the selling bans were put on. It just ended up, we said at the time that it was postponing the inevitable, and now some of the inevitable seems to be arriving. So, but it also looks as though things are looking pretty bleak out there, and it's almost a perfect storm in every direction for markets. And usually when we get that, it usually would seem as though we're getting close to the end, but we can't call the end because you don't want to be catching a falling knife. It's a little early for that, but at some point here we'll probably see these markets wash out, but it's hard to say when that's going to be. So traders need to be nimble and keeping a close eye on things because all these conditions could reverse themselves very quickly, or they could keep on going. It's a really hard one to call at this point in time. The only thing we can say is markets are oversold and at some point overextended, and at some point we'll probably see a reversal. But what triggers it is what remains to be seen. So I'm going to just going to start with a couple of things. First of all, let's start with crude oil because that's one of the big drivers right now. Steady downtrend for the last few weeks. Now look at this, another big candle, pounded down from $31 down below 29. Oil is still oversold extremely. Double bottom and oversold, definitely possible. How low could oil go? Well, to be honest, I mean, I hear people pulling out all kinds of numbers, and their guess is as good as mine, and really your guess is as good as mine. I don't think that this is really being driven by fundamentals now. I think it's being driven by politics and sentiment and a lot of other things. So now the 30's broken. Could it test 25? Maybe. Could it test 20? Maybe. What's the round number that's finally going to spark the producing countries to actually take steps to get the market back under control? It's hard to say, and in a lot of ways it's anybody's guess really. But I think at the same time, anybody who does think that they know what level oil is going to bottom out at is probably kidding themselves because when markets get like this, it's really hard to say. To move on, I'm going to start looking at some stock markets. Let's start with the U.S. market here. We'll begin with the U.S. 30, which has a pretty good plunge of its own. Look at this, right from about the holidays, just do 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 do. We've had hardly any. This is a pretty strong run of red candles here. We're getting back. We've broken 16,000 round number in this Fibonacci level here, and the markets just have kept right on plunging. We've taken out that intraday low as well that dated back to September. Now we're starting to head back into approaching these August lows back here. The market got really oversold at that time and had a pretty substantial rebound from well, look, the low was 15,310. The high was almost 8,000. So that's a better part of 2,500 point rebound. We're starting to get oversold on the RSI again. Could we get more oversold? Yes, but at some point we probably also there's a potential for some stabilization to come in. We'll also look at the Germany 30 here as well. Another one that's just keeps breaking out support after support. Oh, that's almost a head and shoulders there, and we fell away from that. But now look, with this big candle here, we're starting to get down towards these August, September lows again. 93.20 for the DAX. RSI not quite as oversold as previously, but starting to get there as well. So this is also starting to look pretty extended to the downside. Sorry, we're just going to wait a moment here for that to catch up. Okay. And we'll look here at the UK 100. Same sort of thing. Big failure at 6,000 here, pounded down. UK, the FTSE actually is already retesting its low here. The FTSE's a little more heavily weighted in energy stocks than the DAX or the Dow. And look at this, it's actually been touching a new low here. But positive RSI divergence, we could be close to some sort of washout here as well. I'll also show the Canada 60. Another index here that's been quite hammering. Look, it's taken out its summer lows already and continued to plunge here. It's also getting oversold as well, but Canada could still be volatile for a few days. I also want to show the Hong Kong market and Japan. And Hong Kong broken again. It's broken 20,000. It's now tested 19,000. Here's another market really, really, really oversold. At some point, we'll probably get a bounce. It has gotten very overextended, but when that comes, it's hard to say. But at some point, we'll probably get a snapback on that one as well. Let's look at Japan. Another one just been crushed, taken out its September lows here. It's also, even the Nikkei is getting oversold here. It's taken out 17,000, kept on going. We're not getting the big pullback ups yet. I think a lot of people are waiting for the China data to set the record straight on what's going on there, and probably when we start to see more earnings, may help to stabilize sentiment as well, or it could make things worse depending on how things go. But it's getting pretty pessimistic out there, in my opinion, anyways. The final one I'll just highlight here: Australia 200. Same sort of thing. Another round number failure. This one was at 5,000. Taken out these lows here around 48.65. Taken out 47.90 and down. Not quite as oversold as other markets yet for the Australia, but so we'll see. But the Australia, of course, is taking a hit on metal prices. Let's take a look here at copper. Copper is also taking another hit. It's declining here. Although look at this, big positive RSI divergence for copper at some point could bottom out. So we're seeing positive divergences. We're seeing extreme oversold readings. So at some point again, we're probably getting close to the later innings of this sell-off, but we might not be quite there yet. We'll see what happens when Monday will probably be fairly quiet, as often the case when the U.S. is on holidays. But we'll see what happens Monday night when the China data comes out, into Tuesday morning when the U.S. comes back from the holidays. So I said I think a fair amount of this selling is people just trying to clear off the tables, just heading for the doors before the weekend. And so we'll see if that's enough to be the final capitulation. My suspicion is we usually don't get the final capitulation on a Friday. It's usually on a Monday or the first day of the trading week when people come back from the weekend. So maybe early this week we'll get a washout. It's hard to say. I just wanted to move over to currencies now. Two in particular. Let's start with the Canadian dollar. I'll start with US dollar CAD, but I'll also show CAD US. Look at this. It's just relentlessly driving higher here. Incredible. Broken out again. It has traded up to 145. Extremely overbought. Could be a double top here in the RSI. But at the same time now, is it being drawn to the 150 round number? Who knows? It's just look at this. How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 straight green candles building on this breakout through 140. So just a relentless drive higher, but at some point the buyers may probably relent, and at which point we could be in for a significant correction, but who knows when that'll come. Now, while I'm talking about CAD, let's talk Bank of Canada. One of the things that's happened with the Canadian dollar is it's been hit hard as speculation that the Bank of Canada could be forced to cut interest rates has been growing. In 2015, they cut in January, they cut in July. We've now rolled back around to January. Has got a lot of people thinking that maybe the Bank of Canada will have to cut interest rates again. Now the question is, has this already been priced in by the markets, and how much of the Bank of Canada stimulus work has been done by the falling loonie? The Bank of Canada has made no effort whatsoever to try and support or stabilize the loonie. They've been perfectly happy to let the currency crash, and crash it has. So a year ago, when they cut interest rates for the first time, Canadian dollar was trading around 83, 82 cents. 6 months ago in July, it was trading around 77 cents. Now it's trading around 68 cents. So the dollar has come down substantially, since the first rate cut. Clearly, the market's pricing in more. So I think that when we do, we could see a washout in the Canadian dollar around the Bank of Canada meeting on Wednesday. Why? Well, if they cut rates, then people might start to say, okay, well now the rate cut is done for a while, and now they're done. Or if they don't cut rates, then I think you'll see a serious snapback rally in it, because look at how deeply oversold this is. Just incredible. Got oversold, not much of a rally. It's a huge, huge oversold situation in Canadian dollar. So at some point we could see it stabilize and start to find its way back upwards, but who knows when that might actually happen. The other thing I wanted to highlight here, cable, coming off of the Bank of England meeting, where people are still speculating clearly that the UK interest rate liftoff could get pushed out, whether that's the economy in the UK, whether that's the economy in other countries, whether that's the possibility of Brexit, there's a number of factors out there that people now seem to be leaning towards a fall rate liftoff for the UK rather than a spring, and who knows if that's even the case. Maybe that could get pushed off farther. Look at this, we've gone from above 144 to below 143. The next round number for this one is 140. Could we be drawn there? Who knows? It's really oversold. Again, at some point we might get a rally, but who knows when, and who knows what it's going to take to actually spark one. Who is having a central bank meeting this week, and perhaps we'll keep an eye on this one. This is Euro Sterling. Is that again? This has been spiking up while sterling's been weakening. But now we'll see what happens with the ECB. They've got a meeting on Thursday this week, and so the question with regards to them is, are they going to cut interest rates again? There's been some hinting from the meeting, from the minutes of the last meeting, that they didn't cut the deposit rate as much as some members wanted to. Then at the same time, some members thought they went too far. So it could be another fairly contentious Euro meeting. If they don't bring in more stimulus, though, we could see the euro continue to strengthen. But if they do make a stimulus move, the euro could tumble back pretty rapidly. So it'll be interesting to see whether we get this uptrend confirmed or rejected. The euro itself is fairly steady here. It's still consolidating after the big liftoff after last meeting. It's been bouncing around between 108 and 110, continues to do so. It's gotten up towards 109.80, towards the high end. RSI is lifting up off 50. So if we do see a breakout over 110, it's 111.11 up here. Next big Fibonacci and round number test. The last couple of things I wanted to highlight here is I've talked a little bit about defensive capital flows. So I'm going to show the yen, dollar yen, and I'll wrap with gold. Dollar yen. This chart going down is U.S. dollar weakening to yen strengthening, and look at this. It's gotten oversold, and so we're having in a bit of a pause here. But to me, this still looks like a pause between a potentially bigger downtrend. Not only are we getting the capital flow flight, but we're also getting the fact that I think the U.S. dollar has still peaked. If people start thinking that the Fed may cut back on the number of 2016 rate hikes from 4 to 3 or 2 or even 1 or none, that the U.S. dollar is probably peaked here with the U.S. dollar index around 100, and it could start to work its way back the other way. Similarly, gold also could be a beneficiary of a weakening U.S. dollar this year. Whether we want, let's call this, is this a saucer bottom, a head and shoulders bottom, a double bottom? The point is it's looking like a bottom here. And we'd broken out over 1086. First run faltered around 1115. This 50-day moving average is emerging as new support. 50 on the RSI is holding. The general trend remains upward. So it does look as though gold is having a correction within an emerging uptrend, and at some point we could see this continue to climb as well, based on a wide variety of factors. So we're heading into what looks like it could be another big week for markets. I'll just highlight quickly here a couple of the earnings reports. Nothing Monday. Tuesday, Netflix, Bank of America, Morgan Stanley. Wednesday, Goldman Sachs, Kinder Morgan. Thursday, Verizon, American Express, Schlumberger, Travelers. Friday, the General Electric. So big names reporting, and a big focus on guidance in addition to the actual earnings reports. In fact, guidance may actually be more important in a number of cases. A lot of economic news, a couple of big central bank meetings as well. So a lot going on. Looks like we could be in for another huge week for trading.